We throw the word disruption around so much. It's almost lost its meaning.
It's just background noise at this point.
Totally. And we're always looking for the next big thing in, like, the same three places.
Right.
Some geniuses in a garage in Palo Alto.
Right, the garage.
Or a university lab, MIT, Stanford, you name it. Or, the massive campuses of Google or OpenAI.
The usual suspects.
Yeah.
The established pipeline of innovation.
Exactly.
Oh.
But the story we're getting into today, it doesn't fit any of those boxes. I mean, if you pitched this as a movie script a few years ago, Hollywood would have said it's too unrealistic.
It really is a complete outlier. The data points just don't line up with the conventional wisdom.
We are looking at a stack of reports here about a company that has, you could argue, triggered the biggest geopolitical shock in tech since, I don't know, the original iPhone.
Maybe even further back.
And here's the kicker. It didn't come from Silicon Valley. It didn't come from a computer science department. It came from a quantitative hedge fund in Hangzhou, China.
And that origin story, the hedge fund part, that's actually the key to understanding everything else. We are talking, of course, about DeepSeek.
DeepSeek, yeah. If you work in tech and you're listening to this, your Slack channels have probably been on fire about this for weeks.
Oh, it's been inescapable.
But if you're just watching from the sidelines, you might be wondering why a Chinese app suddenly shot to the top of the charts in the U.S. and why, maybe not so coincidentally, some major U.S. chip stocks took a nosedive on the same day.
It is the classic Sputnik moment. That's the phrase popping up everywhere, from the Financial Times to all the tech blogs.
Right.
It's that sudden wake-up call, the realization that a capability gap we thought was there, this, moat protecting Western AI dominance, might not be as wide as we thought.
Or in some areas, it might just be gone.
Gone entirely.
So that's the mission for this deep dive. We're going to unpack this mystery. How did a group of high-frequency traders accidentally, or maybe very intentionally, build an AI superpower?
And we have to explain this open weight strategy they used, how they basically weaponized open source against the giants.
Yes, and we absolutely need to get into the tech, specifically how they built a model that rivals GPT-4 for, what, a fraction of the cost. Because the economics here are just as wild as the code.
The economics are insane.
So let's start with the money, or where it came from. Because usually a startup story needs venture capital. It means pitch decks, Series A, Series B.
And all the pressure that comes with it, the pressure to grow at all costs.
But DeepSeek, they didn't take any VC money.
None. Zero. And this is a huge differentiator. DeepSeek is a spin-off of a company called Highflyer.
Highflyer. Sounds ambitious.
It is. Highflyer is a quant hedge fund. It was co-founded back in 2016 by a guy named Liang Wenfeng, who's this math prodigy from Zhejiang University.
Okay, so for anyone listening who doesn't track finance, what's a quant fund?
Right. So they don't rely on people shouting on a trading floor. They rely on pure math. They build these incredibly complex algorithms to find tiny microscopic glitches in the market and then trade on them automatically, thousands of times a second.
So they're already in the business of prediction.
Exactly. Prediction is the whole game. But here's where the timeline gets really interesting. In 2016, most funds were using pretty simple linear models on standard CPUs.
Fast, but not smart.
Right. Fairly rigid. Liang saw where things were going way earlier than most. He realized that deep learning, the same neural net tech behind the whole AI boom, could be applied to the markets.
So while everyone else was looking at financial charts, he was looking at neural networks.
He essentially bet the farm on it. By 2017, Highflyer had shifted entirely to GPU-powered deep learning. They were building their own supercomputing clusters just for trading stocks.
They're an AI research lab disguised as a hedge fund.
That's exactly what they were. And this makes so much sense because if you're doing high-frequency trading, you need extremely low latency. Your code has to be ruthlessly efficient.
Right, because if your code is bloated or slow, you lose money. Milliseconds matter.
That is the crucial insight. In Silicon Valley, there's a culture of solving problems by just throwing more compute at them. Just buy more GPUs.
Yeah, build a bigger data center.
But in high-frequency trading, you solve problems by optimizing the hell out of the code you have. That culture, that obsession with efficiency, it's just baked into Highflyer's DNA.
Okay, so fast forward to April 2023. ChatGPT is out. The hype is in full swing. Highflyer announces they're opening an AGI lab.
And they were really clear. This wasn't just to build a better trading bot. They explicitly said they wanted to build artificial general intelligence. And by July, that lab spins out and becomes DeepSeek.
And because the hedge fund was so profitable, they just funded it themselves.
They essentially wrote a check. They use their own trading profits to bankroll the whole thing. Liang Wenfeng has a term for it, patient capital.
I love that. Patient capital. It sounds so much more relaxed than the frantic pace of tech.
Well, it changes the incentives completely. I mean, if you're a typical AI startup, you have investors asking every day, how do we monetize this? Where's the revenue?
You end up having to build a product before the science is even ready.
Exactly. DeepSeek didn't have that pressure. They could just sit back and focus purely on the engineering.
It sounds like a luxury.
Yeah.
But clearly, it paid off. Okay, let's shift to the tech, because they didn't just build another copycat model. They built something that, on paper, shouldn't have been possible with the hardware they had access to.
Right, and that is the elephant in the room, the export controls. The U.S. has these strict limits on selling high-end NVIDIA chips to China. The whole assumption in D.C. and Silicon Valley was that this would basically starve the Chinese AI sector.
The logic being, you can't train a world-class model without the absolute best chips.
That was the theory. DeepSeek poked a giant hole in it.
So how did they do it?
They adopted a philosophy of pragmatism over hype. Instead of just brute force, they focused on the architecture. Their models use a specific setup called a mixture of experts, MOE.
Okay, hold on. Mixture of experts. Sounds like a game show panel. Break that down for us.
Sure. So imagine you ask a question to a traditional AI model, a dense model. It's like asking a librarian who has read every single book in the library to use their entire brain.
Every neuron.
Every single neuron to answer your question, every single time. It works, but it takes a massive amount of energy.
That's heavy lifting.
Very heavy. Now, a mixture of experts model is different. It's like having a team of specialists at a table. A history expert, a coding expert, a biology expert, and there's a router at the door. When a question comes in, the router looks at it and says, oh, this is a math problem. Send it to the math expert. The other experts, they can just stay asleep. You only activate a tiny fraction of the model's brain for any one query.
So you get the intelligence of a giant model, but the running cost and the speed of a much smaller one.
Precisely. And DeepSeek just optimized this architecture obsessively. They train on about 2 trillion tokens of English and Chinese text. But the magic wasn't the data, it was how efficiently they used their compute. They got performance on par with models like Llama 3 or GPT-4 with way less horsepower.
And less horsepower means less money.
A lot less money. Which brings us to the price war. This is where the story goes from a cool science project to a full-on market disruption. In May 2024, they released DeepSeek V2.
I remember this. The pricing was It was just absurdly low. It looked like a typo on their website.
It was predatory pricing, no question. They undercut all the big Chinese players, Baidu, Alibaba, Tencent by orders of magnitude. We're talking pennies on the dollar. If the going rate was $1, DeepSeek was charging a cent.
Why, though? Just to grab market share?
Partly. But remember the patient capital, they don't need short-term revenue.
No.
By dropping the price to almost zero, they basically commoditized the entire intelligence layer.
And forced everyone else to slash their own prices just to stay in the game.
Exactly. Overnight, the profit margins for selling API access in China just evaporated.
That is brutal. It's like that early Amazon strategy. Your margin is my opportunity.
It's a classic move. But DeepSeek took it one step further, and this is the open weight philosophy we have to talk about, because this is what really scares the big guys.
Right. We hear open source and open weights. Are they the same thing?
People use them interchangeably, but open weights is more accurate here. So think about it like this. OpenAI's GPT-4 is a black box. You access it through their API, you send a request, you get an answer back.
You're renting their brain.
You're renting their brain. You have no idea what's happening inside, and they can change it, raise the rent, or even see what you're sending them.
Okay.
With open weights, DeepSeek releases the model itself. The weights are the actual numbers, the parameters, the learned intelligence of the network. They just put it online for anyone to download.
So you can take their brain and put it on your own server.
And disconnect it from the internet.
Yes. This is a huge deal for privacy, isn't it?
It's everything for certain industries. If you're a bank or a hospital or a defense contractor, you can't send your sensitive data to some third-party API.
No way. You don't want your patient records leaving the building.
Right. With DeepSeek, you self-host. You control the data, you control the hardware, you own the brain. And you can even change it.
They can fine-tune it.
Yes. You can take their model and teach it specifically about, say, your law firm's contracts or your company's internal documents. DeepSeek became an infrastructure supplier, not just a service. They gave away the building blocks.
And the world just ran with it. I mean, I've seen developers getting these models running on gaming laptops. It feels like they actually democratized access in a way the big U.S. labs promised but never really delivered.
They absolutely did. And that brings us to the real shock, the real Sputnik moment. It wasn't just V2. It was what happened in late 2024 and then specifically January 2025.
The release of DeepSeek V3 and R1.
Exactly. V3 was a general-purpose model that proved they could compete across the board. But R1 was different. R1 is a reasoning model.
Okay, reasoning. That sounds a little vague. Doesn't all AI reason?
Not really. Most large language models are just incredible predictors. They're predicting the next most likely word. It's like a super fancy autocomplete.
They don't really think before they speak.
Not in the way we do. Reasoning models, like OpenAI's O1 series and now DeepSeek R1, use a technique sometimes called chain of thought.
Like showing your work in math class.
That's the perfect analogy. Instead of jumping to the answer, the model generates an internal monologue first. It breaks the problem down. Okay, first I need to solve for X, then I need to compare that to Y. Oh wait, that looks wrong. Let me double check that step. It spends more compute time thinking before giving you the final answer.
And DeepSeek R1 can do this as well as the top American models.
That is the shock. The benchmarks show it performing toe-to-toe with OpenAI's O1 on really complex math, coding, and science problems. And remember, they did this with supposedly inferior chips and a fraction of the budget.
So this basically kills the argument that you need 100,000 H100 GPUs and $10 billion to compete.
It shatters that argument, and that is why the stock market reacted the way it did. Investors looked at DeepSeek and realized, wait a second, if intelligence is becoming this cheap and this accessible to build, where is the moat?
Right. If a hedge fund in China can match Google's performance for a tenth of the cost, the whole economic picture for AI looks very, very different.
It's also a massive geopolitical wake-up call. The assumption was that export controls would buy the West, what, a 5-year lead?
Turns out it might have been a 6-month lead. It also shows the ecosystem factor, right? DeepSeek didn't just appear out of nowhere. China has been pouring resources into STEM and AI for a decade. The talent was already there.
The fuel was in the tank. DeepSeek was just the team that figured out how to build a better engine.
So let's talk about the ripple effects. You drop a rock this big in the pond, the waves go everywhere. What's happening inside China first?
It's a pressure cooker. Total chaos, in a good way. You have Alibaba scrambling to release their next big model to prove they're still relevant. You have ByteDance and Moonshot announcing their own reasoning models.
The domestic competition is just ferocious now.
Ferocious. DeepSeek forced everyone to get better and get cheaper immediately.
And what about in the West?
It's a mix of admiration and anxiety. You go on the developer forums, Reddit, Hacker News, and the engineers are loving it. They're downloading the weights, building amazing apps, celebrating the efficiency.
Which is pretty ironic. Western developers using a Chinese model to build their startups because it's the best open tool available.
It's the ultimate irony of open source. Code doesn't have a passport. If the tool is good, people will use it. But for policymakers in D.C., this is a nightmare.
Because you can't control it.
You can't. It reignites the whole debate about dual-use technology. Once a model this powerful is out there and downloadable, you can't stop bad actors or rival states from using it. The weights are out forever.
You can't put the genie back in the bottle.
No. And it forces the big proprietary labs, OpenAI, Anthropic, Google, to rethink their whole strategy. They can't just sit on a high price point anymore when there's a free, high-quality competitor breathing down their necks. It might actually accelerate their innovation.
They have to prove their value now, not just coast on being first.
Exactly.
It feels like we're shifting from a land grab phase where only a few giants could play to more of a guerrilla warfare phase where these small, agile, efficient teams can actually win.
That's a great way to put it. DeepSeek proved that smart code, that algorithmic innovation, can beat brute force scale.
So, to bring this all together, the story starts with a math whiz in 2016 trying to predict stock prices.
He builds a supercomputer, makes a fortune, and then decides to pivot to AGI.
Ignores the whole VC game, uses his own patient capital, and just obsesses over engineering efficiency.
And in doing so, he releases a model that crashes the price of intelligence, shows that export controls aren't a silver bullet, and gives the whole world state-of-the-art AI for free.
When you say it all at once like that,
Yeah.
It's hard to believe. It sounds like fiction.
It is the most significant disruption we have seen in this entire AI cycle. It just challenges the whole narrative that you have to be in a campus in California to win.
It's democratizing the playing field in a way that's,
Hmm.
well, it's incredibly exciting for builders, but probably terrifying for the incumbents.
Yeah, for sure.
And it makes me wonder about the next DeepSeek. We're all watching the tech giants, waiting for the next press release, the next big event. But this came from the shadows.
It usually does. Real disruption rarely comes from the center of the map. It comes from the edge.
So here's the question to leave you with.
Mhm.
As these AI models get so efficient that they can run on a laptop and the knowledge of how to build them spreads, where is the next leap coming from? Is it going to be another big tech company?
Hmm.
Or is there another high flyer out there, a team in biology or logistics, maybe even a gaming studio, quietly optimizing their code, just waiting to drop something that changes the world overnight?
The barrier to entry is falling every single day. I wouldn't bet against it.
A fascinating thought. That is our deep dive on DeepSeek. We cover the math, the money, and the geopolitics. If you found this useful, share it with that friend who keeps asking if AI is a bubble. This story might just change their mind. We'll catch you on the next one.